All right. Welcome, everyone, for another webinar done by The Block. I'm Larry Cermak. I'm the Director of Research at The Block. And we're going to be talking about custody today. And we're going to be talking about custody mainly in the Asia-Pacific region, but also just generally. We have some great speakers here today. We have Marc, we have Jean-Michel, we have Jean-Marie, and we have Mathias. And so just to start the call, I'll give everyone a brief moment to introduce themselves and the company that they work for. And then we'll just jump into a conversation. And throughout this call, all of you guys will have the opportunity to ask questions. If you look on the right, you have a questions tab. And towards the end of the webinar, we'll have like a 10 to 15 minute Q&A session. So all the questions that you guys ask, I'll try to get through most of them. So please ask a lot of questions, and we'll start with Marc, if you can briefly introduce yourself.
Hi, everyone. Nice to meet you. My name is Marc Robinson. I'm the COO of SBI Digital Asset Holdings. And we're ultimately here to focus on really maturing and building out the institutional marketplace, both on the custody side, but also the full ecosystem around what institutional clients are needing. And so I'm really looking forward to this and having a good in-depth conversation with everyone here today.
Thanks, Marc.
Hello, everyone. I'm Jean-Michel Pailhon. I am head of the enterprise business unit at Ledger, which is right now Ledger Vault, which is a digital crypto asset custody technology platform. I've been at Ledger for 4 years now. And before that, actually, I spent 15 years in traditional capital markets at Euronext and NYSE. And basically, the reason I'm there today and the reason why I'm at Ledger and talking to all those great guys in this webinar is to convince you, for those of you who have not yet convinced, that we are there to change the world of finance, and that obviously everything regarding crypto custody is at the core of that, because without a good custody, you cannot do everything well. So we'll discuss that today, I guess. Thank you.
Thanks. Jean-Marie, please.
Hi, everyone. My name is Jean-Marie Mognetti. I'm the CEO of Coinshares and the co-founder of Coinshares. And as part of our journey at Coinshares, as early as 2017, we realized the need for custody. And that's how we get this fantastic company called Komainu launched in partnership with Nomura and Ledger. And Jean-Michel and I have been working for years now together to bring Komainu together to the market.
Cool.
Hi, everyone. My name is Mathias, one of the co-founders and Group CEO of Sygnum. Sygnum is a technology group with a bank in Switzerland and also an licensed asset manager in Singapore. And what we do is we basically offer banking services for digital assets, cryptocurrency, stablecoins, and asset tokens. I'm really excited to be here with you guys. And as also Jean-Michel said, it's all about, in our case, bridging the gap between traditional finance and a world which is much more exciting, the world of future finance, as we call it.
A lot of collaboration, not much competition yet. But let's start really broadly. I think what a lot of people are wondering about, especially these days, is kind of the change of how the space is perceived. So last year we've seen a ton of institutional adoption. We've seen large funds, large macro investors get involved, and at least from my experience, by talking to custody providers and people servicing these clients, the demand is not stopping yet. And so I'm wondering, maybe we can start with Marc. How has the atmosphere changed from like last year, 6 months ago or more, to what it is now? Are you still seeing an uptick in interest from institutions, or how is the environment different right now?
No, absolutely. I mean, if anything, we've seen a real acceleration in the pace of interest. I think one of the biggest differences was back in 2020, although institutional clients were talking about it, only a select few were willing to really pull the trigger and be active in moving forward with the discussions. What we're seeing already, even though it's still only beginning of February in 2021, we're already seeing a lot more of these discussions with the institutional clients actually coming to fruition and actually moving forward. And I think, as you hear constantly within the press, more and more institutional clients are expressing their interest in custody. And I think the more you hear, the more some of these larger institutional clients will continue to feel more comfortable in exploring this space more and more. And I think more importantly, with some of these big institutionals, It's more a case of actually getting the internal risk and compliance teams comfortable. Quite often you have the IT guys, or you even have the business folks which are trying to push it because their end clients are asking for it. But a lot of the risk team and compliance teams are still very cautious. And so I think it's up to us collectively as a group to show the marketplace that this is an industry that is trustworthy and is secure, so that clients can continue to put in larger amounts of their assets into custody.
Does someone else want to add something?
Yeah, if I may, Larry, I think to Marc's point, you get, in one hand, increasing quality of the signature of the client, which is going from, in 2017, you get a very, crypto was very retail at the beginning, has been moving more and more towards what was frontier investment, toward more traditional investment management. And you see now insurance company putting crypto on their Fed account with the blessing of, NYDFS and so on and so forth. But with the acceleration of the quality of the signature of these clients come more accountability, I would say. A hedge fund or a family office will have very different requirement than a pension fund or a very big private equity fund, institutional asset manager. And that's where custody starts to play a very important role, because at some point, the self-custody model, the keep it under your mattress model, or even the, I do it myself and thank you very much. And Ledger has been a success story in that matter, with all this Ledger Nano, which has been sold all over the world, has been transformed as an ecosystem was maturing. And that's one of the key takeaway of 2020, and certainly will be continued in 2021, is how we see this demand starting to accelerate for proper custody for this digital asset.
Yeah, maybe to add, I truly feel 2020 has been a significant de-risking of this emerging asset class, led by Bitcoin and the adoption of it by institutional investors. But it's not a surprise, because we've had this convergence of, on the one hand side, much more regulatory clarity. I mean, in Switzerland, Singapore, but also actually in the US, much more, as just a few examples, but also much more, let's say, regulatory clampdowns in the unregulated space. And that has led to particularly institutional investors realizing, okay, counterparty risk really matter, and that this industry is starting to realize that and putting in place the infrastructure, has put in place the infrastructure that we can, with good conscience, put 9-digit asset value on a platform. And so we see that at Sygnum, or the key the topics that are always being discussed are the assets kept off balance sheet? Is there no counterparty risk against the bank, in our case being a bank? Or is the certifications, the ICIA certifications, the ability to do deep diligence with external auditors on the platform, and also the ability to customize procedures, right? Have special procedure when it comes to withdrawing funds, etc. So it's all the stuff that you care about if you manage third-party money, which these institutions do.
And to complement to what has been said before, and to answer your question, Larry, regarding the kind of institutionalization that we've experienced in the past 6 months, I could totally concur to that, in the sense that the type of leads and question we had in the past few months have changed dramatically. I think that the origin of people knocking on the door to know more about the technology, because as you probably know, what we are trying to build at Ledger is technology. So we are not custodian, and there are great custodian on this panel, and specifically Komainu, that we know quite well. But we are a technology provider, and even though we are providing with this core technology, we have a lot of inquiries from banks that were not interested before, or that were not even allowed to talk to us, basically, because we were seen as evil. And actually, I'm not insider to that, but I know a couple of people from my previous world, traditional capital markets, and I'm pretty sure that among all the big banks, exchanges, traditional exchanges and stuff, probably that in the past few months, the topic of digital asset custody has probably be put in the agenda of all the boards and all the executive committee. That's pretty sure. So obviously we are well positioned, all of those people in this webinar to discuss about that and to also explain to the people that are listening to us, obviously today and after this webinar. But I think that we are very at the center of very important things, and we are at a pivoting moment in between a very emerging alternative asset class to something that get institutionalized, and therefore, you also have to come up with a good technology, good people, operations, all state-of-the-art, enterprise grade.
Yeah.
One quick follow-up question to that people always ask me, and I can only speak anecdotally, but you guys might have a better answer, is that a lot of the institutional interest seem to have come mainly for Bitcoin last year, and not so much for alternative assets like Ethereum. I'm still seeing a lot of demand for Ethereum, but it's mostly from like the VC and private equity side, but not so much from the actual institutional like macro investor types. So I'm wondering if any of you guys can speak about that, if you're seeing a similar trend or if you're seeing similar demand for Ethereum when it comes to institutional investors.
So from our side, I mean, we are seeing some interest from other coins. It really depends on the type of clients that we're speaking to. I think if you're looking at the big traditional institutional guys, they're focused more on Bitcoin, primarily because of the liquidity side of what that has to offer. But then when you start talking to certain asset managers, certain hedge funds, that's when they start also asking about some of the additional top coins as well. So for us, it's very important to make sure that we're able to facilitate institutional clients' needs, but at the same time, for us, we don't want to just be offering every coin that's out there. I mean, we want to work with our institutional clients and find out what are the coins which are being demanded, and then we can integrate that into our SPI wallet custody solution.
To add to Marc's point, I think the way we look at that when we conceive the offering was to say, well, there is two key parameters for us: is A, don't make a technology choice which puts you in a situation where you can't follow up because there's a new security token protocol, which is what the bank ultimately will follow. That you need to support, but the technology can't go in that direction. That was element number one. The element number two is what can we do in terms of, I would say, AML and provenance and check of where are these funds coming from. So it's kind of an intersection between these two, which give us our parameters of what we can and can't do, and check and balance between what the technology offers us, pretty much anything, and what the regulator will allow us, which is this reduced universe. When it comes to the command of the client himself are very much driven, as Marc was saying, by market cap, and market cap will drive naturally the demand. So like you see in precious metal and base metal, where you see the different drivers of this market, there is still a differentiation between what is liquid. A lead market would be much more volatile than gold market, but that's also a function of the market cap and the different people playing with it and buying and selling on this market. So same thing for our demands here, where we see people actively deploying assets in Bitcoin. We also see some active deployment in Ethereum, and some of the coins start to emerge. There is a very strong emerging of Polkadot in 2020, which was at the beginning not the winner, but they managed to turn this around very interestingly, and some of the things which are coming together. So it's I think, as Marc was saying, people are focusing on Bitcoin as an entry point, and then if their board of trustees, their investment committee, and so on and so forth allows them to get more exposure, they're going to look at new stuff, a bit more frontier with some staking functionality and so on. Again, it depends on what are the protocols and mandate.
Yeah, not much to add. It basically is really a phased approach. We see it also on our platform. It's always first Bitcoin, then just getting a handle. Does it really work? And then some trickle down into the, again, market cap driven other coins, particularly Ethereum. And then if institutional investors are interested in further diversification beyond the really larger coins, then it's typically via a wrapper, be it an ETP or a fund of fund or so, which then for them is more comfortable. They feel more comfortable doing that than going directly into the coin, because for the low market cap coins, the institutional grade custody and processes liquidity are not yet as strong, obviously.
Cool. Yeah. So another question. Obviously, we're talking about custody in relation to Asia and the APEC region. I'm wondering if you guys have experience with how the clients differ from each jurisdiction. So obviously there's more kind of American and Europe centric customer, and then there's more I guess the APEC region customer. Are there any significant differences between the customers that are interested in custody, or is it kind of converging and customers are really behaving the same?
I can take that one if you allow me to.
Yeah.
So because we've got three kind of locations, even though we are headquartered in Europe, we've got a big business in the US and big one also in Asia. And what we figured out in the past year is actually the Asian market is quite fragmented, obviously from a regulatory perspective. And also from a user perspective. So you can see a lot of difference between the countries. The level of acceptance, I would say, of crypto is very different from one to the other. And plus there's a lot of volatility, as you've seen with India, for instance, that changed his mind a couple of times in the past few years, let's say. And yeah, so I think that for the institutional players over there, it's probably tougher because it's not very stable. It's probably complex to launch business, but still there are actually a lot of exchanges that are doing their business there, and brokers, and obviously ultra high net worth individual and family offices that are investing heavily. And just to maybe complete what has been said before in terms of coin selection, for instance, we cover more or less 90% of the whole crypto market cap with all the cryptos. But what we see in actually Asia is that actually the demand for Bitcoin and Ethereum is important, but of less importance than in the rest. And they are more attracted by, I would say, coins that are anything from the 10th to the 50th ranking kind of things. So there's maybe a little bit of ask and look and call for alpha generation, I would say, that are coming from maybe coins that are less institutionalized yet.
And quick follow up to that, why do you think that is? Why do you think that in Asia they tend to focus on the lower market cap coins? Is it because they just want more upside, or are you aware of any specific reason?
I can say I think we see the same, and I think the key reason is just more higher risk taking propensity. That's also in traditional markets, right? Options market, derivatives markets. Asia is big, much bigger than Europe. In Europe, there's more the tendency, okay, let's go long and let's believe in the trend and hodl. And in Asia, there's more hunger to trade, also options, etc. And hence, yeah, it's in line with what Jean-Michel said.
But that's also like Asia still very much a high net worth / family office driven demand. They didn't get yet the blue chip corporate kind of wave we have seen coming in the US or asset management. And outside of SBI, there is some couple of interesting companies to follow in Japan, but there is no big there is no real grayscale equivalent or a big asset manager outside of Japan acting for digital asset. So it's a very different demand from what we see in Europe, in the US first and in Europe as a follower. And Asia is still very much into a high net worth / a very strong retail as well, but high net worth / hedge fund family office type of environment more than big institutional, despite banks starting to do a lot of work. DBS launched last week, not last week, 2 months ago probably now, one of their key new venture, which is this exchange in Singapore, which is a fantastic progress to see a bank doing that themselves. There is a number of heavily backed exchange in Japan, like the Monex one, and Bitflyer is heavily backed as well. So there is a lot of big player, but it's still not coming to fruition in terms of listed companies say, okay, I'm going to allocate treasury to Bitcoin or Ethereum, and that's kind of also drive a different kind of demand you can see across these different regions.
Yeah, and I think part of that is also down to the regulations of each country as well. I mean, Japan in general, the FSA kind of got a little bit burnt a few years ago, and so they're taking a calculated but careful approach going forward, and especially with the emergence of the STO markets as well. They want to make sure that they present regulations to their Japanese client base that they feel is right. And one of the most interesting things, and I think we're going to see a slight change in Japan in particular, is now that we have the new prime minister over here, he's very much focused around digital. And I mean, SBI has obviously been very vocal about what our plans are in Japan, and we're going to be launching the ODX exchange, the Osaka Digital Exchange. That I think is going to further help drive the digital asset market in general here in Japan specifically, because that is going to be a regulated exchange that is going to be offering a variety of different digital asset types. And then what with other venues around the world looking to do similar type of products, I think if we can do this global connectivity on a lot of these key exchanges, that will also help the overall liquidity of some of these tokens that are coming out as well, even if you look past the cryptocurrency side of things.
We've kind of touched on this already with this question, but you guys talked about like the variability of regulations in each jurisdiction. So I'm wondering how that kind of shapes up the market. Like, do you think that eventually there's just going to be a bunch of kind of custody providers that focus on each like individual regulation or each individual jurisdiction or a small group of jurisdictions? Or do you think there's eventually going to be, like large custody providers just kind of covering basically the entire world or the entire market that's important right now? Is it even possible with the current kind of diversity of regulations?
I think there's almost a step change. You have first, the country is really not focusing on crypto, not allowing regulated crypto, and then once this is done, I think that it is possible to operate across various countries as a custodian, as a custody provider across various countries once that's switched on and once the regulation is in place. Where what you're saying applies much more is then when it comes to compliance and anti-money laundering travel rule topics. There, I think it will take a bit longer via FATF and others until there's a bit more a broader cohesion across countries. But on the custody side, I feel it's possible once the regulation as such is in place.
But if I flip your question a bit upside down, Larry, you have to split this question in two aspects. First, the crypto asset, I would say, which are Bitcoin and others for sake of an argument, and then the security token. And that's the kind of two elements which needs and which will require custody. And on the crypto asset side is pretty much up to the client. If an American client wants to do custody in Europe, it's up to him. For digital asset, nobody will prevent him to do that. If a Japanese bank wants to do custody outside of Japan for digital asset, more complicated, the FSA will probably step in to say you have to do custody onshore. Now, the digital asset kind of landscape tell you that pretty much one entity could service pretty much a client from anywhere in the world as long as this client is willing to do so. So the requirement for the old traditional model to have a custodian in every single country where you trade the stock it's not really applying. Now, when it comes to the security token, that's where it becomes interesting, because the security token will require a form of CSD, which will push you towards having specific regulation to the jurisdiction where the security token is issued. So a Swedish issued security token will have to be cleared somehow in Europe, at least, if not in Sweden, while a Japanese security token will have to get some clearing, settlement, and custody inside Japan. And that's where you're going to see, I would say, a growth in the custody offering, where some custodian will be able to cater for this market by having a bit like you see with Euroclear today, which has kind of like positioned a bit everywhere in Europe in different countries, or DTCC in the US, being able to map or mesh the geography or the map and offer a service to all these clients.
What are some of the, let's say you're approaching a client, what are some of the features that you point out that kind of separate you guys specifically from other companies? Like how can custody providers compete against themselves? Like what are the main metrics that these customers are looking at right now?
So from our experience, from speaking to customers, it's a mixture of two different key areas. One is how customizable is the product from a custody solution point of view, because some clients want to do self-custody, some clients want to use a third-party custodian. And if you're looking at a third-party custodian, then it's less complicated. But if you're looking to do self-custody, then you need to start looking at, okay, how do I integrate our custody technology into that institutional client's existing ecosystem? And that obviously, depending on the technical capabilities of the client, can raise some potential issues, because then you not only have the security element to think about around how your technology stack actually works, you've then got to worry about the technology stack of the end client as well. And are they inadvertently opening up any potential security holes that you may not be aware of because you don't have full control over that complete suite of products? And obviously you try and put as many mitigation processes in there as possible. But at the same time, if you don't completely control the whole technology stack, there's always ways of penetration if you look hard enough, no matter what anyone says.
I think to follow up on Marc's point, I think when your client look at your technology solution or your custody solution, they kind of break it down in different angles, and there will always a technology stream, and there is a upstream. And the upstream is very much, the technology is a technology, and client in general have a very strong tech team, but to not able to differentiate the merits of one versus another unless you talk to a PayPal who have a full blockchain team able to deep dive. When you speak to a normal customer, they will much more focus on, okay, I'm a hedge fund, I get a fund admin, I get auditors, I get the regulators, I get a trading and execution team. Okay, sorry. How does that integrate within my ops flow? And do you guys in this custody business, in our case Komainu, understand what are my pressure points to onboard you and make you part of my flow? And if you don't understand that, and if you don't have the expertise to know within 5 seconds where the client's suffering, you can't understand the client, and then the report and the relationship become very complicated because you're talking very different language. So I think what you see now with custodian, in the custodian client relationship, is how do you make sure these people speak the same language and are able to cross bridges together so as they can deliver this kind of groundbreaking for them as a client as well solution, because they're trying to be a trailblazer in their own field by adding crypto exposure to the portfolio. And that's really the mission of the custodian, is how do you facilitate, how do you get them the fluid to make sure that this is going to happen easily?
What we always find is 2-3 questions or strategic decisions that, particularly in the B2B segment, clients do. The first one is obviously, do I even want to be in crypto digital asset? Yes, no. If yes, next question is, do I want to do it do I want to build it in-house, or do I want to work with a partner? There's very few that want to build it in-house. Some large players want and do, and I think this will there will be less and less, probably because the infrastructure provider, the tech providers, and the custodians are in place are just more and more ahead of the curve, so it will be difficult to catch up. Last 2 years it was still possible for some, and if they decide to go with a partner, then there's the decision: is it with an infrastructure, with a tech provider, or with a full service provider? If it's tech, both have pros and cons. With a tech provider, there's a lot of work with the integration into the processes, and also for banks, for example, core banking systems, etc. it's a deep, like kind of 12, 18 months IT project in most cases. And if it's with a sub-custody provider, for example, we offer that, then it's much more, it's faster, and it encompasses more beyond crypto, beyond custody, particularly compliance services, etc. These are more the customers that want to have an all from one kind of service provider approach, but then obviously the dependency is a bit higher. So this is how we usually see how people make decisions.
We've seen some rumors about like large tech and banks wanting to acquire some custodians. Like we've heard that PayPal might be considering acquiring BitGo, and you kind of touched on it, Mathias. But why wouldn't a tech company or why wouldn't a bank build this in-house? Like what are the roadblocks right now? Is it just time intensive, or is it technology as well?
Can I take that maybe, and then Jean-Marie, I think that you probably have a good insight on that. Well, so in the past 4 years, let's say, we've discussed with a lot of banks, and especially during the previous bull run, a couple of banks kind of interviewed us, I would say, to understand what we were building and to understand the technology, etc. And actually, it's great because we ended up partnering with Nomura, which is actually a success, thanks to Jean-Marie, because he's the deal maker of that. But a lot of the others actually spent a lot of time, and we were entering rooms with many people that were very smart, with a lot of financial means. But at some point, there was simply a no-go from someone at the top that was not comfortable with crypto as a whole. So basically, probably that 3 years ago, some of the big banks could have launched things, but it was not the right time for them. Plus, the market was quite small, because at the end of the day, when you launch a business, obviously you need to have a reward for that. And if you launch a business and your total addressable market is, I don't know, 100 million of USD per year of revenues, well, is it worth it when you do billions? Not sure. For us, like a scale up like Ledger, yes, that's worth it. But for some big banks, that maybe not so the case. And then there's also an important topic is that within those banks, actually, there's a lot of very smart people, right? But if you are fascinated by crypto and by blockchain or whatsoever, well, it might have been a challenge time for them to actually build in-house stuff, simply for the reason I just explained. And therefore, maybe that some of those people actually decided to leave also. And so now yeah. But I concur to what you just said. I think that there will be some M&A coming in the next few years. And actually, if I was working for banks right now, that would probably be the key things I would look into, because probably that among the scene of the top 5 or 10 players, whether on the custodian really the service of the custody and the technology, they are probably one of the top 5 or top 10 giant in 10 years will be around that. So you probably have to acquire those companies at some point.
Yeah, to come back to Jean-Michel's point, I think custody is a very tough business, and a lot of people jump in custody as a great business. It's actually not a great business. It's a very dirty business, to quote Anthony Pompiliano when we were discussing one day about that. And it is very labor intensive, and it's a lot of work and a lot of process and policies, and a lot of small company kind of jump on the bandwagon, not really understanding what was the full scope of custody. So if you look at the custody landscape today, I can tell you that probably 80% is going to die without fail. And within the 20% left, you're going to get either consolidation or acquisition, and that's going to go very fast. There was rumor on the blog a couple of weeks ago about the RFI from Goldman Sachs. There was rumors on the blog, as you mentioned, from PayPal and BitGo. I think Mike Belcher denied any term sheet being on his desk, and he was willing to see the term sheet. But it's a great landscape. It's moving super fast. Custody is just a starting point. It's not what people are buying at the end of the day. They're buying something much wider than custody. They're buying a much more integrated solution, a much more easy to play, plug and play solution. And the reason, to come back to your question, is that why is not building it themselves is like, sometime when you go back and if you look at the big PB consolidation movement back in the late 90s, early 2000s, well, yeah, you could have just built another FX desk or another equity desk, but it was much more simpler to buy the client and the book of to buy the competitor and his book of client and say you're coming in house, and now we have this multi-cross asset PB which cover everything, because ultimately the client want one point of contact, not to call this guy for FX, this guy for equity, and this guy for future markets. It's much more simple to get an all-in play. And custody is going very much that direction, where custody is the base layer of the house, and the services are kind of built on top of that.
Yeah, I have to agree with Jean-Marie on that. I mean, for us, we kind of like to use the analogy of an onion. So, I mean, custody is obviously the center part of the onion, but you do need all of the other outside parts of the onion that act as the key services around the whole digital asset business in order to really make this something that's going to be worthwhile for the clients. And I mean, obviously SBI has been quite heavily involved in different M&A activities in the digital asset space, and we're not slowing down on that. And I mean, part of the reason why we do it is because, yes, I mean, we're not naive enough to think that we can build everything in-house ourselves. For us, we built our custody solution in-house because it was the most secure way of building something that had to have top-notch security around it. However, there are other elements of our broader digital asset ecosystem where we've done strategic investments into companies where we can work in partnership with them and we can grow the ecosystem out together collaboratively. I think that's one of the key differences as well around this space compared to the traditional financial services space, where I think now there is a lot more collaboration. Whereas in the past, it would be a lot more of him versus someone else. I think that's also been a unique shift in this landscape compared to the traditional one.
Well, it's also due to the size, you know, like it's still a very small business, so the gun should be pointed outward, not inward. So you cannot favorize that. You know, we're all part of the same kind of ecosystem, and we're all willing to see a bigger boat, not a smaller boat. So we all need to help each other to make this ecosystem wider and support the vision that this is growing and transforming the way we consume financial products.
Another thing I wanted to touch on in regards to what you briefly talked about PayPal, there's also a rumor that they're thinking about like having their own white label stablecoin at some point. So how big of a part will stablecoins play in the custody business overall? Is it possible that eventually it's not just Bitcoin, Ethereum, but you know, banks are going to be custodying stablecoins with you guys? Can you see that happening, or is that something that you're not really considering?
Stablecoin are digital assets, so natively, at least for us, we support them because actually most of them are running on either the Ethereum blockchain or other blockchains like TRX and stuff like that. So basically, we support them natively, I would say. So that's actually already an asset that the banks or the users of our solutions are using to obviously to wait on the sideline when they did a trade or whatsoever. So that's already existing. But I think that your question is maybe broader than that. It's how those stable coins want to be, some new stable coins want to actually replace fiat money somehow in the payment system, let's say. And I think there's a couple of them that are waiting on the sideline for that. But I think that there are other people in this channel that can probably provide some additional insight on that.
Yeah. So
yes. Go ahead.
Sorry.
Sorry, go ahead.
So this is it's basically the custody at the very core of a new emerging DLT powered financial market infrastructure. It's whatever you want to do, be it in crypto, stable coins, or asset tokenization, you need the custody infrastructure in place. And so to your question, absolutely, stable coins will play a major role, because not just for the fiat digital asset or crypto gateway, there's a big use case, but also as asset tokenization growth to get to true delivery versus payment and really reaping the benefits of what blockchain gives us. You need to do both legs, the money transfer and the asset transfer on chain, and hence very much so. I think in fact the growth rates will be quite significant in the years to come.
I don't think it's for us to dictate whether clients should or shouldn't use stablecoins. I mean, I definitely think that it's going to gain momentum, and as custodians, I mean, we should be able to support these stablecoins.
Yeah, well, what I wanted to say is like stablecoin have a key feature more in the settlement of trade than in the custody part. So, not a lot of people just sit on piles of cash. They normally go in treasuries and they go in something else. So supporting stablecoin is like a natural thing for us. What we would be love to see is to see, treasuries or corporate bond on the blockchain where people can just go back and forth with stablecoin, and we would be very happy to custody that. That would be a much more interesting step forward for the industry. And I think Société Générale, the Vault Forge, I think it's called, announced a project like this a couple of months ago, I think, around this kind of blockchain bond issuance. And if you can get this product now being able to be custody, and people can get out of the trade and out of fiat or cash or stablecoin into corporate bond or any other yielding instrument, it would be a fantastic progress for the industry.
Another thing I wanted to talk about is a little bit like the products that are a little bit more exotic. So, for example, support of staking, and then perhaps like supporting DeFi protocols as well in some way. Is that something that you guys are looking at? I'm assuming that for staking, it's really a no-brainer now. But are you guys considering DeFi as well in some way, and how you're approaching staking in the future?
So I cannot say if nobody wants to. On the DeFi narrative is a very, very, I would say, on an institutional level, it's still a very VC-driven narrative. So you see Andreessen Horowitz being a big part of that. It's a very much Silicon Valley-driven phenomenon. We don't see yet proper institutional asset manager telling us, yeah, we want to get exposure to DeFi. You can see Ethereum as a proxy for DeFi, and like the success of DeFi kind of like reflect on Ethereum itself, and you can see this kind of virtuous circle happening very nicely at the moment. If you look at the price of Ethereum, that combined with Ethereum 2.0 would give a perfect setup. But if you look at that a bit more, what we are interested in is like, how do we protect people investment? And if you look at thematic around Tezos, thematic around Polkadot, some people perceive the staking as a revenue. Well, it's not a revenue; it's a protection. So it's a very different approach. It's like you have to stake your Ethereum 2.0, you have to stake your Polkadot, you have to stake your Link or any one of these staking protocols, because they are protecting you against the function of the protocol, which create more coins and deflate the value of your holding. So it's a bit of a necessity to be able to offer this service. If you don't offer it, you are kind of offering a half service.
Yes, Marc, please go ahead first.
I was going to say, I mean, for us, we do get asked these questions quite often by our clients, but it's more just inquisitive. I think right now they're still very much trying to get comfortable with the more traditional coins out there, shall we say, than some of these newer technologies or methods. But once again, I think it's just going to be a matter of time. I mean, the institutional clients are certainly sniffing around it. They're not really adopting it just yet, or they're certainly not really asking for us to include it. But yeah, I think it's just going to be a matter of time before that changes.
Yeah, staking now representing a technology group, but with a banking license in Switzerland, we have to offer it, and we do on selected coins already. On ETH2, it's a bit of a question of when you want to open it up to institutional investors and bank-grade infrastructure. Technologically, we are ready, but are still holding off and wait and see a little bit how it develops. But it's a must, because otherwise, as you said, Jean-Marie, you basically don't let customers protect themselves against dilution. On the DeFi side, I think it's a very obviously interesting development, and I think the next phase will be to figure out how can you merge CeFi, DeFi, and create a winning model, because without that CeFi, DeFi merge and coming together, I think it will be very difficult for particularly institutions managing third-party money to even dip into it, right? Because no KYC, just doing whatever, it will not be okay for these money pools of money. But it's a huge opportunity, and we are right now investing in it as a future revenue bucket, but it's not yet for us an active product.
Cool. Yeah, we're running into the 15-minute mark, so I'll start looking at some of the questions that we got, and I saw that Jean-Michel already answered one, but I can also ask this one for everyone else, since people seem to care about like how are the assets that you guys support determined? Is it purely based on demand, or do you have some specific metrics that you have to determine which ones to support and which ones to not?
In our case, we have a risk framework. So every asset that we list on our platform, ultimately also from a governance standpoint, needs board approval. There's about 35 elements, and including tech, obviously various tech elements that we analyze, and I think twice a year then review. And it also includes obviously the business side, but not only. There's risk frameworks, there's ability to ensure AML rules, anti-money laundering rules, etc. So it's a full package, and we've created the framework for it, which has also been accepted by the regulators in the jurisdictions we operate.
Yeah, we adopt same approach as Mathias on the side of things. I mean, for us, any new assets that we provide to our clients, we do a lot of due diligence on. We want to make sure that obviously there's demand for them from our key clients, but even on some of the bigger clients on our account, some of the coins that they've asked for in the past, we haven't prioritized over other coins, just because they are somewhat of a relative newcomer, and from a risk profile perspective, it's just something that us as SBI, we're not comfortable being able to offer to our clients.
To complement to Marc, to what Marc and Mathias just said in terms of selection, and going a little bit beyond what I said in the chat, we are digital asset custody technology, and we are there to service institutional investors. So we cannot take any risk regarding the type of assets we are including in the platform, basically, and offering to our clients. And so we have also, as has been said before, a kind of technical assessment or risk assessment of the blockchain in itself, and we have great experts in that. And in the past, we have been quite good in assessing which coins should be integrated in the ledger nanos, for instance, or which not, for a lot of reasons. And we've seen in the past few months a couple of attacks or stuff like that unfortunately kind of validated the way we decided to opt. But at the end of the day, I must say that again, if we are talking about real money, and actually, sorry to go back to what you said, Larry, at the beginning of this, but let's be realistic. I mean, most of the demand, at least from the US and part of Europe, is Bitcoin first and foremost, and then a bit of Ethereum. And then there's, as Jean-Marie also said, the VCs are looking to secure their own token. They had the chance to invest in, like at the beginning, at the ICO whatsoever, at a very small price, and now it represents a large amount of money, and obviously they want to secure that. But again, so I think that if you tackle like we do, for instance, 15 out of the top 25 coin market cap, normally you cover 95% of the demand, I would say, in volume. And then that's what the long tail is about, and what the efforts are to integrate properly and securely blockchain, because I think that's a very important thing to remember. It's not as easy as it seems, and we have many people at Ledger working on that, and we have a great team working on that. But even though we are big enough to make that, I mean, it takes us a lot of time to integrate those because of the security aspect. Because one important thing is that when you do a transaction on the blockchain, what you actually do is that you sign a transaction, right? And you sign a transaction from one address to the other. And if you don't really know what you are doing, and if you blind sign, as we say, because some of the solutions on the market right now are blind signing the transaction, then you don't really know what you sign, and then you run big risk, and you can't take any risk when it's your money. It's not good to lose it, but okay. But it's not your money. That's a different topic. So that's why we are quite conservative, I would say, in that. But even though that, we are taking a lot of, we keep on pushing new coins, and we'll have a couple of new coins announced in Ledger Vault in the next months, actually.
There was another good question about insurance and how, if you guys are working directly with insurance providers to help clients secure the risk fully. So I don't know if anyone wants to answer that.
Yeah, from SBI's side, yeah, I mean, our custody solution is fully insured. We worked very closely with the underwriters at Lloyd's of London, and also with client-facing insurance companies as well, to make sure that we are able to provide full insurance for clients. The insurance topic is a quite an interesting one in general, because I mean, even the underwriters are still very cautious about this space, and they're still very careful about who they actually give insurance coverage to. And so I think over time, the insurance limits that they provide, folks such as ourselves and Jean-Marie as well, will continue to increase. But once again, it will take time, because there needs to be that confidence and that trust element in this business, and the insurance guys are always going to be slow to include additional risk, shall we say.
Yeah, Marc is right. It's a very slow-moving area. There is also a misconception that, when you put money in the bank, everything is insured one for one. It's not the case. Like, there is some very strong scheme in the US where if you put anything above 95 grand, it's not your money. You don't have any coverage anymore. And in the UK, it's probably 85 sterling. So, there is a misconception that every single dollar should be, or dollar worth of digital assets should be insured. The simple answer is, like, there is no capacity in the market for that today. So we're always battling to get a bit more coverage as much as possible. But the market is not, the insurance market is not able today to accommodate for the market cap of a digital asset. And it's becoming more and more complicated, because with COVID, all this insurance company has been pretty much seriously hit. And I guarantee you the renewal of this company, of this insurance, all over the board for digital assets are going to be very interesting, because a lot of the insurance companies we all use have been under a lot of pressure recently. So taking more risk right now is going to be another discussion to have.
Yeah, I agree on that. And actually, on the insurance topic, we worked together with Jean-Marie in the past 3 years or something on that. And yeah, I think the risk premium for sure was very, very high, because simply there was no, statistics on, events that you can insure you against. But even though that, we managed for the technology part of things, we managed to get, for instance, an insurance for 150 million USD for the technology aspect of things, which is great. But again, it comes with a cost, and actually the cost can be quite high. And obviously, if you have got a big client base and making revenue, that's great, because then you can split the costs out of those clients, let's say. But if it can be actually a blocking point for new entrants, I would say. But that's a different topic. And I agree with Jean-Marie. I think we'll have some surprise in the next few years about the insurance capacity to insure digital assets.
The way we do it as a bank, as Jean-Marie said, the first 100K Swiss are kind of insured generally, as for every bank client. That's per client. And then what we do is we make sure that our custody solution is can be insured, and then on the client-per-client basis, if they really want for XYZ reasons, that we do it on an individual basis. We cover more, but we do not just as a just overall do that for cost reasons, also for profit, not for profitability, but rather for reasons of attractiveness for the clients. But if you want, you can, but it comes at the cost.
We also got a couple of questions about STOs and that market in general. It seems like there isn't that much demand yet. There isn't that much liquidity yet. There isn't really a go-to exchange solution yet. Do you guys still think that will happen? And what are some of the reasons why that still hasn't taken off that much yet, compared to digital assets at least?
I mean, SBI is a firm supporter in the STO industry. I mean, for us, we have a strong belief that the STO markets are going to gain momentum. For us, what we've seen is it's really been a case of, especially looking at it from an institutional point of view, there's this constant concern that we hear from institutional clients around the venues that are perhaps offering tokenization of assets right now. They may not feel so comfortable leveraging, and so what they're really asking for is that you do get some more of these traditional players looking to do the tokenization side of this business. And I mean, SBI has been very vocal in terms of what we're going to be doing in the tokenization space, not only in Japan, but also what our plans are in Singapore for the APAC region, and obviously working with our strategic partners in Switzerland and also in Germany as well, and in the US. So I do think that the tokenization market is going to increase. I think this year will be the slow starter for it. We are already seeing a lot more interest in this space. I know there's going to be a couple of big institutional grade token announcements that are going to be coming out in the near term. As with everything, it's the chicken and the egg. No one, or very few people, want to be the first movers in terms of tokenizing their institutional products. Once you get one or two of the big guys doing that, then the others will follow.
Yeah, and to rebound on Marc's point, you know, in 2017 we get this ICO mania and all the ICO about tokenization, and you know, from the ICO we get the discussion about STO and how it operates, and you know, it is very well we figure out a way to tokenize pretty much anything. The question we didn't figure out is how do we trade, how do we settle, how do we post-trade, you know, and how is the whole life cycle of the trade going. And you know, if you tokenize, I don't know, like a building in Tokyo, it's great, but now what are we doing with it? We're just keeping it in our pocket, or we can trade it. And you know, it's almost like the infrastructure didn't follow. So you can see, you know, Marc was mentioning, you know, like SDX in Switzerland. You can see Börse Stuttgart digital experience kind of coming live. There's plenty of infrastructure play which are starting to emerge on the trading side. You know, there's a custodian already. The next phase for custodian is really about interoperability and how do they speak together so as this trade can settle. And then it's about this post-trade settlement pipes, which bring us back to a CSD discussion at the beginning, which was, okay, well, how is BaFin going to behave regarding CSD for German security token versus FINMA versus AMF in Paris, or you know, NYDFS or ACC in the US. So it's all this kind of stuff which are still very much up in the air, which need to settle and find a common answer. I think the best way for everybody would be to find a common issuance protocol, which at the moment has not been defined, so as we can have this interoperability, this inter-exchangeability, and you know, one share of this token, one token of this building is as good as another one. So is how do we get this fungibility between the different tokens on different chain? So it's a vast project.
Yeah. No, I think in Switzerland we had a bit of a breakthrough this Monday. Actually, a new DLT law was taking effect, which is now makes it legally 100% clear that you can basically put a company share or whatever security into the token, and the token itself is the actual asset or security. And we celebrated the occasion by tokenizing a portfolio of fine wine, just to showcase that you can now hold you know, whatever fraction of a bottle or a portfolio of wine. that works beautifully. And hence, I think it's the very start of a fast-growing industry. The key challenge really is that we've been thinking too siloed. I think most of you have said it, and the challenge, the technological challenge, has been overestimated versus the others, which is still 80% legal, regulatory, end-to-end process thinking, integrating in traditional infrastructure. And I think now we'll get there. So I'm very optimistic.
Awesome. We're starting to run out of time. Really great discussion so far, but let's end it on one question, and that's, what do you guys think are going to be some interesting developments for the custody space this year? And if you can maybe throw in like a prediction or something, maybe starting with Marc, and we could just go around and then end this great discussion.
Putting the pressure on me at the beginning. I mean, I think this is really going to be the year where you do see custody being fully adopted by the institutional marketplace. It's been brewing for a number of years now, and I think 2021 is really the year that you're going to start seeing some pretty big players getting into this space, and it's going to put further credence and credibility to the digital asset marketplace as a whole, which will only further help grow this marketplace going into 2022 and onwards.
Well, my turn. So if I had to make a bold kind of bold estimate or bold forecast, and I don't hope it will happen, but we should be prepared for that. It relates to what I was saying before regarding the blind signing, and it wouldn't surprise me if we obviously we all know in this panel that there have been a couple of hacks in the exchange industry in the past few years, and so it wouldn't surprise me if there are some hacks on some custodian or custodian technology because of this blind signing topic, and that we end up with a bad surprise for a couple of players. But hopefully it will not happen, because I'm not sure it will be good for the industry as a whole, but we should be prepared for that.
So two things for me. I think the first thing is 2021 is a year of FATF, whether you like it or not. So that's bring, I would say, more interconnection between custodian and more discussion and more how do we work together. And on the back of that, as Marc was saying, more institutional money mean I don't want my eggs in the same basket. So an SBI custody solution will need to be able to work for Komainu custody solution just because the client doesn't want to get full exposure to SBI or to Komainu. So one day it's going to be me calling Marc saying, hey, I get a client in diversification. And next day it's going to be Marc calling me saying, can we work together on the same deal? And that's going to be, I think, a key thematic which we're already seeing and which happened before in the traditional world when people have not one PBs, they have 3 PB, especially after the global disaster. So I think that's what's going to happen. And the next point, to go back to Jean-Michel's point, is I think we're going to see more and more exchanges actually migrating away from a self-custody model and accepting to pay the cost for custody, not because they are philanthropists, because they are realizing that the custody is a necessity for them to attract institutional business, and also because the regulators are more and more demanding for this custody piece to be, as in traditional market, something put away at arm's length from the exchange itself.
And I keep it short to help you, Larry. Given all the increased complexity that has been mentioned, I think it will be the year many will realize that actually they can't be doing it themselves. So it will be the start of a trend towards more and more consolidation in the market, and scale matters in custody.
Awesome. All right, so I would like to thank all of you guys for being on this really good panel. I think the discussion has been great. Thanks, Marc, Jean-Michel, Jean-Marie, and Mathias. And all of this will be on our website. So thanks everyone for attending, and have a great day, everyone.
Thanks, Larry, for organizing.
Ciao, thank you.
Thank you, bye.
Bye.